Oh man, so it's a huge day for crypto markets. We've got the FOMC meeting just hours away in this video. I've done historical research to show us exactly how does Bitcoin perform on FOMC days and how to trade this move. We're going to look at the chart patterns, we're going to look at what historically happens, and we're going to come up with a winning solution. So smash on the likes, don't forget to subscribe. As always, check out the links in the description. If you want to trade any of these moves, you can do so using BYBIT or BitGet. Those are the exchanges I personally use. And as you can see, Bitcoin is coming into this FOMC meeting, as it does many times previously, in a critical pattern. It's forming this bullish continuation pattern. We've had a bullish move in the lead up to this consolidation in a symmetrical triangle. Now we need to determine which way are we going to break out. This is where technical analysis leads you to a little bit of a dead end, because technical analysis is waiting for the macros to superimpose on top of it to give it some direction. And we know today is going to be a big day. We've got that FOMC meeting. Most of the market, including myself, is expecting a 75 base point rate hike. We've been monitoring this feverishly throughout the week. As you can see, a little bit of a rise up this morning, right? You can see 11.5% has already come back in to suggest a 50 basis point rate hike, which would be a pivot. So it's very interesting that that 10% of the market still believe there's going to be a pivot. Now remember, if we do get that 50 basis points, that shock basis point, 50 base point pivot, we're going to see a lovely green day here in the market. Most of the market is expecting 75 base points. Today's quite a nice day because I can't foresee too much of a shock to the downside. Those could be famous last words. I would always have my stop losses in place to make sure you're safe. But the market is expecting 75 base points. I really do not think Jerome Powell has it within him going into midterm elections next week to do 100 base points. I don't see him doing it. If he wants to do 100 base points, maybe in December, right? But most of the market is expecting him to do 75 base points and then pivot next month to 75 basis points in December. So it's going to come down to not just the rate decision. I think if we see that 75 base points, the markets will be slightly red, right? Nobody likes the 75 basis points. It still happened. Slightly red, but nothing drastically to the downside. And then we go into the press conference. And the press conference, as I'm going to show you historically, is the key to finding where the trade opportunities lie. So before we start, I want to show you what have the returns been on FOMC days, because let's face it, Bitcoin over the last few months has been really boring and it's not had much volatility. What I went ahead and done was analyze the last 4 meetings going back to May this year. Those were the ones where we saw big rate hikes. So these are the ones we want to look at. You don't want to look at ones too much before then, because you're having 25 base points, you're having no rate hikes even before that. And so it's best that we look at these ones. And if you look at September the 21st, the last meeting, on FOMC day, the total return of that day was down 2% on Bitcoin. Okay, so the full 24 hours was down 2% on that daily candle. Go back to the previous meeting, July the 27th, you saw an 8% return on Bitcoin, which is insane. June the 15th, 1.9%, and May the 4th, 5.2%. So that's incredible. You're seeing a really big return there of, on average, 5% on these green days here. Okay, on these green days, if you're to average these three, it's a 5% return. And hopefully we can get a nice green day today if markets can get more direction about this pivot. And that's what's going to be different about today's than the historical ones we're going to look at, because those ones I'm showing you there, they had a rate hike, but nobody was expecting a pivot just yet. There was one of those, which was September, last one, where people started to think that this July one was the last 75 base points. So we went into this one with some people expecting that we were going to get a pivot, and that's why you saw that disappointment. And that's, again, going to be the same today. We've got a little percentage of people who are expecting that pivot, that 10% that I just showed you, but it's not as high as we thought. More important is what people are expecting from Jerome Powell in the press conference. So let's go and look at this. This is the May the 4th FOMC meeting. Okay, now I've taken the time to go back and I've put this in 30-minute candles for you there to look at. And I've shown you where is the announcement and then where's the press conference. So where my cursor is right now, this was the announcement, okay? So that's when the Fed comes out at 2 p.m. Eastern time and they make their announcement of 75 basis points or 50 basis points or whatever they're going to do. Now look at this candle. This 30-minute candle here drove as high up past 39,000 and drove as low all the way back down here to 38,500, right? So extremely volatile candle. And that's where you're going to get the opportunities to take your trades if you're looking to trade and you're an experienced trader. Okay, but then look what happens next. That's that 130-minute candle, because remember at 2 p.m. Eastern he comes up with the rate hike. Now to all intents and purposes, like I've just shown you, rate hikes tend to be priced in the market. Nobody's suddenly reacting on the day to the rate hike unless there's a huge shock. So for example, today getting a 50 basis points or 100 basis points will lead to big fluctuations in the market. Otherwise, what you tend to see when you get what is expected, which in today's case is 75 basis points, you just see that volatility and you end up where you started, right? Which is what you saw on this candle where my cursor is. But the next candle is when Jerome Powell can give you foresight for the next meeting. Remember, traders, investors always try to think ahead. What's next? What's next? They want to be ahead of the market. They want to hear, what does Jerome Powell give us clues for the next meeting? And that is where you saw the green. So in this case, again, we would have streamed all of these press conferences live. You can go and watch them back and you can see how the market reacted, because he would have said some positive things that led the market to feel confident. And again, you could have traded that to the upside. Look at the volatility there. Even on spot, you can make some amazing, amazing trades. And as you know, the links in the description have 0 maker fees on MEXC, 0 spot trading fees on BitGet and BYBIT. So you can definitely take advantage of that with no fees. So these are the two components of the trade. You've got the announcement and you've got the press conference. To many intents and purposes, you've got to be very, very careful with the announcement. This is for experienced traders. On the announcement, you've got highly experienced traders sat at their desk scalping these trades. So that's why you can see the crazy candle wicks from the volatility here. So be very, very careful. Now, let's move on to June. Let's see what the pattern is. Now, look at June. On June, we got a surprise on the announcement candle. We got driven into the red, a nice, decent-sized red candle with big wicks. Okay, and again, if these candlestick patterns aren't making sense, what I'm talking about in terms of wicks and doji candles and green candles and rain candles, you've got to check out the free TA course. I've made it available for free. I'm not sure what else to do. I've shown you how to interpret candles. I've shown you how to use EMA ribbon, different chart patterns, all there. So please do yourself a favor, check it out. It won't be free forever. Link is in the description to the course. Now, what you see is a red day there on the announcement, followed by a big, strong green candle there during the press conference. So again, the same pattern playing out where the press conference is giving you the majority of the alpha on the trade if you held through the 30 minutes through the press conference. And again, look at the wick up there, taking you all the way up to 22,400 before then cooling back down to 21,500 range here after the press conference. Okay, so that was June. Let's then forward on to July. Again, another nice big day. This was the day we got 8%. So this is the biggest return FOMC day we've had over the last 4, which I analyzed. And again, the announcement gave a pretty decent return. Okay, so again, this is where markets were surprised to the upside because they felt that things were looking better. So they had a big move on the announcement. I don't expect this to happen today unless we get that 50 basis point surprise, in which case I think it'll be a big move similar to this through the announcement, through the press conference. But if you look at the pattern in the previous ones, it wasn't so great during the announcement, and then it was better during the press conference. Wasn't so great during the announcement, better during the press conference. In this case, you had green in both. You had green during the announcement and during the press conference. That is because the market was truly surprised by this much on the decision of the rate hike. Okay, so that's if we don't get 75 basis points today. That is where you see big red or big green, depending on which direction the rate hike is in. Okay, so that was the big 8% return. Now, let's then move forward and take a look at September. Okay, so this was our most recent one, and this is when we ended up having a down day of 2%. But again, look what happened. This had a much bigger volatile move because the market was expecting a pivot. And that's the problem, right? If you have expectations, you're going to be let down. And right now, the market has an expectation of 75 basis points. So if Jerome Powell decided in his power to do 100 basis points, the market will dump, right? It will dump. I don't think he will. The majority of the market doesn't think he will going into midterms, but that's the dynamics of how things work. So we got that surprise in September because markets thought he was going to pivot here. He didn't. We got thrown to the downside. But then as he spoke, markets started to recover, okay? These are 5-minute candles. So you're seeing that drop there on a 5-minute candle. I had to zoom in to show you the volatility. Big 5-minute drop there on the candle after the announcement. And then you see the recovery during his press conference as he started to speak from here for the next 6 hourly candles. Then we saw a drop off as markets started to digest it thereafter. And that's the other important thing. You get the volatility during the announcement, you get volatility during the press conference, but then there's a sobering reality which sets in thereafter as the markets digest the information and the outcome over the next few days. So that's really, really important. Now, in this case, we've got a few different things to watch out for, okay? Because we know we've just had the JOLTS figure. The labor market still very, very tight. We know we've got the non-farm payrolls coming out on Friday. That's odd. Normally, you get your non-farm payrolls beforehand. So we're getting them 2 days after the FOMC meeting. Could affect markets as well. So let's get back into the Bitcoin trade and say, okay, what can we look at? So we've just discussed what the different potentials could be in terms of upside and downside. Now, if we get an upward surprise, i.e. 50 basis points, we can really start to moon here and we can start to get ourselves to that 20,000 level. That is what I'd be looking for. right? If you're looking at this triangle pattern, that is the least of what I'd expect here. I mean, we can do this together here, and we can take this measured move as an impulse wave, and we can put this very crudely here at the point of breakout. And you can see we start breaking through that 20,000 level, working our way up to 22,500. That is what you'd want to expect from the bullish case. But the negative case is we start working our way back down. So this is if we get not just the negative case could still be with 75 basis points, right? We can get 75 basis points, but Jerome Powell in his press conference could be really hawkish and doesn't talk about any pivot. In fact, maybe he comes out and says we need to continue to increase rates aggressively. In that case, we need to look for our bearish case. And our bearish case could be bringing us here with the M pattern, coming back to 20,000 and potentially setting us up for a bigger fall down to the bottom of the channel, back at the 18,700 level. So that is what I want to watch for here if the bearish scenario plays out. Now, I do not expect all of that bearish scenario to just play out immediately, but certainly getting to 20,000 and then potentially breaching it during the FOMC meeting and the press conference is a possibility if Jerome Powell has his foot on the throat of the markets. Remember, that is the bearish pattern we're seeing, is this pattern. We need to keep an eye on that. The bullish pattern we are seeing is, can we break this triangle to the upside and get our continuation pattern? That is what we want to see. Now, on the 4-hourly chart, let's take a look at the EMA ribbon. Let's bring out the EMA ribbon, our trusted EMA ribbon, and you can see exactly where we are poised. This is not a coincidence that going into this FOMC meeting, we are sitting here on our 4-hourly EMA ribbon. So we're expecting a big volatile move to come up. Either we're going to get our bullish case, we're going to bounce from our EMA ribbon, have a nice big push to create a higher high. We need to get higher highs above these levels. If we break to the downside, you'll be losing your 4-hourly EMA ribbon, which could set you up for a bigger move to the downside like we've just discussed. Let's also bring out the Bollinger Band, because as you guys know, when the Bollinger Band constricts, that is normally when you're set up for a big move. So it constricted here for a long period of time, big move. It's constricting again. It's like a spring coiling up, getting ready for its next big move. So I'm definitely expecting a lot of volatility in this market to either direction. Even if you look at the RSI, it's sat there slap bang in the middle, waiting for direction. So this whole market is waiting for this FOMC decision. Finally, let's take a quick look here at the pre-market. It's still early while I'm recording this video, but you have got the NASDAQ sitting flat, S&P flat, Dow flat. We are waiting for direction. The whole market is waiting for this FOMC meeting. Even though they understand that most likely we're going to get 75 base points, they don't know. And that's the beauty of this decision right now. It's very binary. It's up to Jerome Powell. You've got the midterms next week. He could come in with a surprise. If there's any time that he could come in for a surprise, it's today. And that is why the market's waiting with bated breath. So guys, make sure you've got the notification bell on. Make sure you've subscribed. We will be going live at 2 p.m. Eastern time to make sure we cover off not just the announcement, but the press conference as well. I will be taking questions. We will be looking at the charts live as Jerome Powell goes through the press conference. Thanks for watching, guys. Don't forget to go watch this video here, and I'll see you in the next one.